It took a while for currency traders to figure out what the inflation figures meant. At first, the Aussie went up because the newsflash said hopes of an early rate cut were dashed. But then it tipped over as everyone thought, oh, hang on, maybe it's better than we thought. And it's now trading at 65.4 US cents, down from last night's 65.7. But I think the truth is today's figures change nothing. Sure, headline inflation is 2.8%, well within the target band of 2 to 3%. But we should ignore that because the Reserve Bank does. It looks at the trimmed mean, which cuts off the biggest 15% of price rises and the smallest 15%, and only includes the middle 70%. And that's even more relevant this quarter because of electricity rebates, which have temporarily cut the power prices to 30% below what they would have been. But core inflation is doing better than the Reserve Bank wants it to, which is to come down to 2.6% by the end of 2026. If it keeps doing better, then rate cuts are on. And if you've got young kids and you're thinking that inflation hasn't come down at all, actually, that might have something to do with this. Childcare inflation has soared to well above 10%. The main event on the share market today was also about the cost of living. Woolworths put out a trading update that said customers are under pressure and the earnings outlook is challenged. The share price dropped 6% and other retailers and banks also had a bad day. Globally, it was the US and Japan up, Hong Kong and Shanghai down, and not much happened on commodity markets apart from silver going up more than 2%. And that's finance.